Right. It's beautiful. Please, if you're in class, good evening, everybody. Good evening. If you're in class, I'd like to just type one in the comment section. You know how we do it. Just type one in the comment section. If you are hearing me, if you can hear me, and you can hear my voice, you can see my face, just type one in the comment section. All right, who else is in class? Who else is in class? Who is in class? Are the class members sleeping? You know, it's quite interesting when you have. I'm still wondering who added a lot of persons to this group that we have 121 members. I'm still wondering who added crowd like this. I'm wondering who added this crowd, 121 members. It's not everybody that filled form. If you don't fill form, anyway, sure. Because you see, you have group of 121 members, and usually very low percentage, or just an handful of them join the online class. And there's no problem. Maybe they're watching the videos, always very eager to teach. After sometimes they're mellowed down. Because just because I teach people, I like to teach you for free, does not mean what I'm teaching you is cheap. It's not cheap. It's not cheap. It's what we teach. If you see anybody teaching forex, if you see anybody that is profitable in financial markets, you must have paid. You must have paid and paid heavily. You must have paid with money, paid with sweat, paid with time, paid with headache, paid with stress, paid with. I don't want to say paid with his blood. I don't want to say paid with his blood, but paid with time. He must have paid the sacrifice. He must have paid with sacrifice. He must have paid with studies, time to study. He must have paid with thousands of hours with the charts. And I mean thousands of hours with the charts. Not just trade, not that it's trade, but thousands of hours in the charts. He must have paid. Nobody succeed. Nobody becomes profitable without paying school fees. And it's not cheap school fees, it's heavy payment. And many people don't really understand that. You understand that? If all that it requires is one YouTube videos you watch to become profitable, it's an insult on those who have made career out of trading financial market. It's an insult that all that they made as a career, somebody can actually learn it watching a single 10-minute YouTube video. It's not that easy. It's not. But the beautiful thing is that the moment you master it, it becomes so easy. It becomes so easy. It becomes so easy. It's only easy. And just like any skill, and you need to understand that trading financial market is a skill, that you're acquiring. You cannot acquire a skill in 24 hours. You cannot acquire a tangible skill even in 1 week. Even in your week. Who becomes a professional fashion designer in 1 week? Who becomes an effective mechanic in 1 week? Okay? Who becomes a professional in any field of endeavor in 1 week? No. But then you have watched one single YouTube video and then you feel that's all there is. No, 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 no. That's not all there is, bro. That is not all there is. And so it's a skill that is requires that you are supposed to acquire. It is a skill on it. It's not just to tap, buy, and sell. It is a skill. It's like you go to learn something. It's like becoming, and that's why I always begin. Recently, I started beginning my physical classes with the statement: trading is a career. It's a career. So you have to respect it. The career. Because all that people think is that is a gambling. So they just since I just press the button and buy, and then I just press the button and sell. It should not be more than that. See, behind every before you press the button of buy and sell, several things have gone ahead of. Several things have gone ahead. Several things have gone ahead. I'm telling you. Several things. There are times you wait on a setup for 2 weeks. 2 weeks. You're waiting on a setup for 2 weeks. You're waiting for 3 weeks for a setup. And when it gets to here, I'm waiting for it to get to this place. And then you are waiting for 2 weeks. If you not get there, when you not get there, is that when everything started cooking? No, it has been cooking for the past 2 weeks. And how do you know what to look for when you get to that place? It might have taken you a year to figure out, I think to learn how to figure it out. That's very important. Very, very important. And you need to understand that. So trading, they say, is very risky. And I tell you, when you hear the word risk, it doesn't mean you run away from it. The word risk means much knowledge is required. When you hear the word risk, you hear that any professional or any profession is risky. It means much knowledge is required. Being a medical doctor is risky, much knowledge is required. Being a pilot is risky, much knowledge is required. That's what it means. So trading financial market is risky. It means therefore much knowledge is required. So if much knowledge is required, why do you think watching just one 30-minute YouTube video is all that you need to be profitable in it? No, sir. No, sir. No, sir. I've not even taught you, maybe I'm just about halfway into the syllabus that I thought I was going to cover in 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 15 days. I'm just about halfway. Just about halfway. So we may likely close tomorrow actually. I'll be doing once in a while in the future. And then I'll start another class in December for exclusive students in Kwara State. So it's risky. It's a career. There is also a lifestyle of a trader. There's a lifestyle of a successful trader. There's a lifestyle of a successful trader. One of the things I find out about successful trader, they are humble. See, they respect the market. Respect the market. You need to learn to respect the market. Market is the boss. Market is the boss. Respect the market. Give the market respect. Because if you don't respect it, you will blow money. And the market does not care. Respect. Learn to respect the market. So people trade gold and they can't respect gold. They trade gold. You are using $50 to trade gold, and then you are opening position of 0.1 long size in my goodness. I just don't want to mention certain things. Somebody traded gold with us today and he entered 16 positions. 16 positions on an account that is less than $100 or about $100. 60. What an insult on gold. And they pulled back, wiped away all the money. They pulled back, wiped away all the money. How can you 16 positions? I counted it. 16 positions. No, sir. That's an insult on gold. Respect gold now. You think it's like that? No, it's not like that though. The somebody, the person managing that group sent me the the screenshot of the person. I was like, no, sir, no, you're not supposed to do like this. I said, is it what you told them to do? He said, no. You open 16 positions on gold on an account that is less. Aisha, respect gold. Gold is not anybody's mate. It's not your mate. I'm sorry I'm talking like that, but that's the message you carry. As in when you see gold on the street, you prostrate. Say, yes, sir. Good morning, sir. Good afternoon, sir. You prostrate. You salute. Yes, sir. Yes, sir. Yes, sir. Good afternoon, sir. Good evening, sir. When you see gold on the street, then you not say, okay, all right, my boy, all right. I'll give you like, you know, 500 pips. Next time you come, I will give you like, 1,200 pips. I'll give you, I'll give you 2,000 pips. The more you respect good, the more you give you pips. Respect, come on, respect, respect, respect. Don't come to gold and trade gold with $30 and $50. And people do it, they do this because, sometimes in the years past, if you want to join our signal group, if you don't have up to $500, we don't even take you. We don't. You can't even pay. But recently, people like, no, let me. No, you pay your risk. We pay. You pay, but we will give you instruction. Give you instruction. You don't join a signal with less than $200. And some people see, I've seen people joining with $10 and they're making. Somebody joined with $10 and he made $30 in the first single trade. In one day, we traded gold. Somebody joined with $10 and he make like $20 with gold. I said, all right, okay. I said, but please be careful. Respect gold. It's not your mate. So he did that 3 times. He has made his money. He has made multiple. One day like that, he just did it again. Then go that serious pullback. Because what we used to do is that we'll wait till the end of the pullback before we give you signal. So most times we really have a drawdown. So the moment you enter like this, everybody just making profit. Everybody just making profit. You know, we've been waiting with our team. And then get blew their account. So he now came. I said, but you have multiplied your $10 several times. And I told you don't trade $10, don't trade gold with $10. How can you trade gold? What an insult. And some people used to believe something. They think that I can just fund $10 and just make it to $10,000. All those ones you see online, they're not true. Even when they now show you when it is true, he has tried this several times, it didn't work. The one that is work is the one that is showing you. So don't think that it has always been working like that. No, it doesn't always work like that. It doesn't always work. You know. I've had students that we traded for 6 weeks, and in 6 weeks they made money. They went to buy house and bought land in 6 weeks, or in less than 6 weeks. They made so much money, and they went to buy house. They went to buy, two of them. They bought houses and they bought cars. Sorry, they didn't buy car. They bought lands and they bought houses. From trading crash and boom, only crash and boom, only crash and boom. They went to buy house. They bought house in Lagos and bought land in Lagos. But that could not be replicated every single time. Market behaved in a certain way that time. As far back as 2020, you went to buy house and bought land. They were so serious. Where they went to buy land, they were arrested. They said they were arrested because they came to give me a report. I know them physically. They were not just they were my offline students. I know them physically. I know their houses. Okay, and they were like, oh, we got arrested, and he said in the lawyer's office that they said they're Yahoo boys. How can they at their age, 200 level student first semester, how can they of their age make such money? Until we were trading crash and boom in the lawyer's office. So when they traded live and showed the lawyer like this is what we do, that was the only thing that rescued them. But live in the lawyer's office, they were making profits. I'm telling you. So, but can that be replicated all the time? No. Something happened to them that time. Something happened to Crash and Boom that time. It was very interesting. You know, it was like when Crash and Boom is trending, trending. And of course, it can be replicated, but at that that every single time? No, not necessarily. And so when it happens and they give you that market, praise God. But don't think that, look, you have now become champion. Because the celeb does something. That you trade for 2-3 weeks and you make profit for 2-3 weeks doesn't mean you should not put FX in your name. If you have not traded for 3 years and make profit for 3 years consistently, don't even think you are now Kenika FX. Wait, why? Because see, the moment you start doing that, you start thinking bigger than who you really are. And then the only book say, do not think yourself highly than you ought to think. It you know says you not think about yourself highly, but don't think highly more than you ought to think. But think soberly. As God has dealt to every man the measure of faith. Just know your level. Just know your level. Like me, I don't compare myself. I know my level. There are people who are bigger. They have they have bigger capital. In fact, one of my goals is that, of course, I've gotten to a level where I can apply to a bank to trade. And that's one of the things I was doing. Apply to a bank to trade. And apply to, trade for big institution. And I promise you make stupendous money. Because I will not be day trading, I'll just be trend trading. I'll just strictly trend trading. I'm telling you, it's interesting. So please see forex as a skill, as a skill. As a skill means you'll be patient to learn. As a skill means there's no skill you learn that you start making money the first day, except you learn Okada. And that's why I used to use I respect Okada men, in those days when I used to take Okada. But then it is a skill that every angry guy, that's why you see a lot of accidents, bike accidents. But because it takes maybe only like 10 minutes for someone to just climb on bike and move it and say together, oh, he's not learning. No, there's no coordination, there's no license, there's nothing like just like we have driving license, there's no riding license. And the guy can just move back from here to there. That's why they always having accidents. So definitely, if you learn forex just for 30 minutes from a 30-minute video, you will have accidents in the market. You have accidents in the market. There's no way around it. You know. But then and then there's a lifestyle of a forex trader. Let me run it from there. There's a lifestyle of a forex trader. Very humble. Because he knows that he made profit the last time does not mean automatically the next trade he will make profit. So he's humble to approach every single time he comes to the market with optimum respect. That's exactly what I'm saying. So he's humble. He's humble. See, let me tell you something. I started giving signals in 2019, 2020. Now, my goal then was to trade for 14 hours. I trade 14 hours every day. I'll be giving signals, giving signals. I had VIP members who literally based their family income on the signals. I had this situation when a woman will call me, please, I'm paying my children's school fees tomorrow. We need to trade today. So we trade. We do they pay their children's school fees. But there's something they did not know. Every single time we win trade, I used to win back to back crazily. Trading synthetic indices back to back. Those were the days where, those were the days when in Trump's first tenure, when the market was strictly ranging, it wasn't trading. So at every support you could buy, at every resistance you could sell, almost the ranging market was very crazy. But one thing is that at the end of the 14 hours, I go back to my desk, I go back to my books. I want to read again. I want to study again. So there was a book I read more than 8 times, and every single time I begin to read it, I buy a new exercise book. I jot all over again. Because I respect the market too, because I know that I won the last one does not automatically mean I'm going to win the next one. That I gave a signal and it was profitable the last. So I'm humble. Come on, humble. Humble yourself. Under the mighty hand of financial market, my goodness. So humble, honestly humble. So note that consistent profit is the goal. Consistent profit is the goal, not just profit. Any fucking person can make profit, but see, not every single person, not so many can make profit consistently. If it's just to make you make profit, okay, I'll just come. You will have ended this class long ago. I just spent 2 days teach you a strategy. And there's something about deriv. When deriv sees a particular strategy that everybody is using to win money, they will just they find a way to when they find out like this, they will change the algorithm again. But when you know the real reason why market behaves in a certain way, no matter how they change it, you will come out with profit because there's certain things that cannot be manipulated for a long time. Okay, cannot be manipulated for a long. So if it's just about you making profit, this class did not take us more than 2 days. We will have been done because I'll just come with the strategy. Okay, and then we will just share it, like giving you crash and burn strategy. We'll just share it, and then it will work in certain time. It will not work in certain time. But to make profit consistently, that you can like say that when you lose a trade, you know that we're winning back in the next one. You just know that you win because there's no manipulation that can certain thing. For example, I'm teaching you price action. There's no way market want to manipulate price action. Even if you lose one, the next one you will make it back. So you need to be very strong on risk management. Be very strong on risk management. One of the things I like people to do is to maintain your risk maintain the same risk over a period of time. And even when you lose, you will make it back in the next one. And so when you lose, it will not demoralize you. You're saving to win it back in the next one. Okay. So let me quickly let's go back to what we shared yesterday because I discovered that some people did not really get it. They will now go to what I actually want to share, what I saved yesterday to be taught today. Very simple thing, but so very important. Okay. If you are still hearing me, say, can you type 2 in the comment section? If you can still hear me, please type 2 in the comment section. Let me know if you are hearing me. If you can still hear me, type 2 in the comment section. Well, I'm excited. I'm super excited, I'm telling you. All right, so let's continue. Let me share my screen with you. The main thing I want to be sharing today is this. For the last set of people that I trained, I started using the word the dawn zones. I'm telling you, the dawn zones. I started using that word, the dawn zones. Okay. Now, the area of interest, AOI, is the most important thing when it comes to candlestick reverse, when it comes to reversal candlesticks patterns. Okay. And the area of interest are number one, your support and resistance. Number two, their trend line touches. Number three, their demand. Number three, they are your demand and supply. Their demand and supply zones. Number four, they are your Fibonacci retracement. Retracement levels. Please take note. These are your area of interest. These are your area of interest. Your support and resistance, your trend line, your demand and supply zones, your Fibonacci retracement levels. I'm telling you, there are the fourth one that I don't know, you cannot find anywhere in your body, but I believe so. See, Fibonacci retracement levels. Then we have demand and supply zones, the trend line touches. Okay, then we have the support and resistance. Very, very important. These are the areas where your eyes are always looking at. Your eyes are always looking at. Because because number one, I like you to understand something. Number one, see, market moves in zones from zone to zone. Let me tell you something. Market price moves from zone to zone. My goodness. Price, or let's say market moves from zones, from zone to zone. Market move from zone to zone. My goodness, I'm telling you. That's how market move, bro. Market move from zone to zones. Market moves from zone to zones. And you need to understand. So when it's moving from one zone to zone, when it's moving from one zone, from zone A to zone B, what will you look at to know that it's about to start moving from one zone to another zone so that you can join the trend, because trend is your friend? That is the skill. That's one of the most important part of this skill acquisition. One of the most important part of this skill acquisition. When you're going to observe that market move from zone to zone, how do I join? Because we said that price move like this. It moves like, it moves retracement, impressive movement, retracement, impressive movement, retracement, impressive movement. Okay, impressive movement is always the portion. Okay, the longer part. Impressive movement, retracement, impressive movement, retracement, impressive movement, retracement, or pullback. Impressive. How do I know? This is a zone? For example, look at here now. Look at here. These are the areas they're going to be looking at. This is a zone. It's moving to this zone. Then it came back to this zone. Market came back to this zone. How do I know? Is it going to break it down or go up like this? So this area is my interest. This is now support and resistance. This is support and resistance now. This is support and resistance. Then I can also have something like a trend line. Like a trend line. You see now? Did you see something like this? You see like this? This area is my, so all those candles, I'm looking at this area, because you see there is no reversal candles without, first of all, the area where it is getting formed. So this is area, which candle is forming here. So I'll be looking for any of the bullish reversal candles here, any of the bullish reversal candle formation here. So if I see a bullish reversal candle here, it means that, oh, an impressive movement is about to start again. If I see it here, based on this support and resistance here, in relative to this place, because this is resistance here, has become support in this place. Okay, has become support in this place now. So I'll be looking for, if I will have drawn this line, I might have drawn this line and be watching it for 2 weeks, watching it for 1 week, or watching it for many days. So in the future, I'll be looking at this spot now. The moment I'm expecting it to go up, actually. So, but I cannot just buy like that, because it can still go down. It can decide to go down and break this low. Okay, but I'll be watching for bullish reversal candle at this spot. Bullish reversal candle at this spot. And I've just taught you a few of them. I told you I'm going to be teaching you 20. Even the one I taught you is just one. Doji. The all 5 doji is just one. It's just one out of 20. I'm telling you, just one out of 20. Okay, so I have here now, I'll be looking for dragonfly doji. Here, I'll be looking for pin bar. Here, I'll be looking for morning star. Here, I'll be looking for Arami, bullish Arami. Here, I'll be looking for, what other candle? Bullish engulfing. Here, I'll be looking for, which other candle will I be looking for here? Bullish candle. I'll be looking for 3 white crowns. Here, I'll be looking for, which other candle is bullish engulfing? 3, I'll be looking for, of course, doji. I told you doji, the common doji and the long-legged doji are neutral. But if I see them here, I'll also be looking for doji at this spot. I'll be looking for doji at that spot. I'll be looking for pin bar at that spot. The armor, I'll be looking for bullish engulfing at that spot. I'll be looking for bullish harami at that spot. I'll be looking for three white soldiers at that spot. At that spot, I'll be looking for dragonfly doji at that spot. At that spot, I'll be looking for which other candle? I'll be looking for railway blazers, railway track. I'll be looking for railway track, bullish railway track at that spot. At that spot, I'll be looking for spinning top at that spot. So many candle, bullish candle at that spot. The moment I see them, it's telling me that this pullback is about to end. But if I didn't see any bullish candle here now, that means even though I'm expecting a buy, but the buy may not occur. I'll be looking for bullish reversal candle at this spot. That is how to trade. That is how to trade. Okay. All right. So let's continue to the next slide. So I said at every time in the market, we have buyers and then we have sellers. We have buyers, we have sellers. We have bulls and bears at the same time. But when the number of buyers surpasses the number of sellers, the market moves in the upward direction. When the bulls are having upper hand, you will start seeing green candlesticks, and that shows strong upward price movement. The reverse is the case when the bears are having upper hand. When the bears are in control, you will begin to see red candlesticks, and that shows strong momentum to the downward price. I hope you are still hearing me. So before you start looking for reversal, don't forget this thing. This is where the secret is. Though we're going to look at it on the chart together. Before you start looking for reversal candlestick, you should look for, first of all, your area of interest, the dawn zones. Area of interest. Area of interest, dawn zones. Area of interest. Let me highlight that one in red color. Dawn zones. My goodness. Area of interest is what gives values to reversal candlesticks, because reversal candlesticks can be formed anywhere. Many of you that showed the example, because see, that's the difference from what we're going to be doing today from what we did yesterday. Today now, you see from your assignment, you're only identifying those reversal candles. Some of them are not relevant. We don't need them because of where they are formed. Okay, so what we're going to be doing today, why is it different from what we did yesterday, was we're going to be identifying these reversal candles based on the zones. Based on the zones, just like I showed you in the analysis I just did for you a moment ago. So the reversal candles, they are only relevant on the area of interest, on the down zones, on the down zone, on the down zones, area of interest. So general rule, the higher the time frame, the stronger and the more reliable the reversal candlesticks are. So see, when you see, meaning the reversal candlestick you see on M15 is stronger than the one you see on M5. That's 5-minute candlesticks. And the one you see on H1, 1 hour time frame, is stronger than the one you see on M15. And so on. That means the one you see on 4 hours is stronger than the one you see on 1 hour, on 1 hour time frame. Very important. Imagine you see a reversal candlestick on 4 hours. I remember years ago I saw one reversal candlesticks on 4 hours. It was on a Thursday. I was trading one weird instrument, very uncommon instrument years ago. And then I entered that trade on a Thursday. It did not enter profit until the following Tuesday. And I knew that, look, this thing must enter profit. It must. This thing I'm seeing here, this reversal candlestick I'm seeing here now, at this particular zone, it cannot but enter. There's no way around it. It has to enter profit. And of course, it does not work 100% of the time. There's no rule here that work 100% of the time. It's not possible. There's no rule, but then it's just about most of the time, because it's about speculations. Speculations that can be, a calculated speculations. I mean, a speculation that can give you, that you can analyze. That's why it's different from gambling. Is when they don't know. It is somebody who has been frustrated by forex, who didn't learn the rules that say forex is gambling. When I asked them to define, to describe forex to a 7-year-old, they said, I didn't really understand it. I didn't really go deep. Something is wrong with you. You sold your mother's land, you sold your properties, you sold your businesses to interest in something you don't know. Something is wrong with your brain. See, listen. Even when you trade and you're losing money, it's no problem. There's nobody that does not lose. There's nobody that started to trade forex and they didn't lose money consecutively. There is no one. There is no one. It doesn't exist. But then when you lose, your eyes is open to so many things. Don't get frustrated. Don't think that okay, just because you lose, this thing is not working. See, it is the school fees you are paying. Your eyes should open. Someone that invested with me before, invested with somebody that knew, I had a team when, I had one particular friend of mine that we formed a team that time. So I knew somebody who now invested with us. But I collected investment just because this my friend of mine could trade better than me as at that time. So we collected the money and then but we blew the money. I had to pay that money back later on. My goodness. I traded one day, I could not sleep at night. I'm telling you, we have all paid, we've all lost money. Nobody here has never lost money. But the more we lose, the more our eyes open. So every time you lose money, especially when you trade currencies, when you trade forex, go back to that chart. Why did I lose? Was it the news that came in and reversed the market? Because if it's the news, there's only nothing you can do about it. The only thing you could do was that okay, did I check news before I entered that trade? Did I check the news before I entered that trade? Or did I get my analysis wrong? If you get it wrong, learn from what you got wrong so that you not make the mistake the next time. Okay. And so reversal candles are very powerful. Okay, they're very powerful. And then we say from the plenty reversal candles that we intend to talk about, so we started talking about doji. Doji is the first. See, listen, is the most basic. There is no place that taught reversal candlestick that don't mention doji the first one. That is the first reversal candlestick that talk about. Every single time I train, if I'm going to share with you reversal candlestick, this is the most basic, is the most important of all of them. Of course, it's not the, don't let me use the word most important, but it's the beginning. Doji why? Because it's very neutral. It is like somebody has started pressing the pedal or pressing the brake. Somebody is pressing the brake, it's about to stop. It's about to stop. You can now stop to turn back or stop to continue the journey, but at least there's a slowdown in the pace. There's a slowdown in the speed. Doji signifies a slowdown. So you now watch. Somebody can slow down and continue, or slow down and make a U-turn. Now that is why doji is neutral. So you are now looking at, okay, is it going to continue? So you now wait for another confirmation. When you see doji, don't take decision only on doji, except you want to put a pending order. You will wait for a confirmation, another candle to confirm the doji to tell you the direction, because it is neutral. It is a neutral candle. It's the place of indecision in the market. You will need another candle to confirm before you. Actually, that is for conservative trader. For an aggressive trader, the moment he sees doji, he enters his trade straight up. But for a conservative trader, you want to wait for another candle, a confirmation candle to be formed. For example, see, if you see bullish engulfing, I don't wait for another confirmation again for bullish engulfing. I enter my trade straight. But for doji, I wait. So we say we have four variations of doji. We have the common doji, we have the long-legged doji, we have the dragonfly doji. Just a moment, please. Just 1 minute. All right, sorry. Then I also learned that some people don't watch this class because they don't have data. You have to have data. I'm even teaching you for free. So if the money is supposed to use to pay for training, you use to buy data. It's for your own good. Though. That's what I learned. I wish all of you are close to me. I can give you unlimited data. You got to see, I have data. I used to call my neighbor. Please let me use it because the same amount of money I pay at the end of the month is unlimited. But you can do nice subscription and watch because you need to watch this thing to learn from it. You need to watch to learn from it. All right, so let's continue. So we have common doji, and we have long-legged doji, then we have dragonfly doji, then we have the gravestone doji and the four price. Then these are they all look like. They all look like this. Okay, they all look like this. They have now you see, please watch very closely. Watch very closely. Watch very closely. Now the simple doji, the common doji is how what I gave you the name simple. It's called common. The common doji and the long-legged doji, they are very similar. It's just that the leg of the long-legged, this one they look similar, but a little bit different when you get to the chart. The long-legged doji has a longer leg. It's just a bigger. See, it's like this, but just like this leg is longer than this leg, and then the opening and the closing price is still at the middle. The body is there at the middle. If it has, but the body is there at the middle. But the long-legged doji, the leg is longer. The long-legged doji looks like this, but longer leg. Just assume that the common doji is not as long as this. Assume this one is a long-legged doji, but just shorter. So we use this as representation of a long-legged. So it's just that the leg is longer on both sides, on both sides, on both sides. Then we have the dragonfly. Dragon, the body is on top. I'm trying to give you a cheat to be able to know which one is which. Actually, it's about knowing the how the price is being formed that actually matters. But for the purpose of teaching, you need to know them and know their names. And then knowing how they are formed is very, very important. Very, very important. So then you have this gravestone. Gravestone is always in the ground. And because grave is in the ground. Don't forget that. Gravestone, because the body is down, because the grave, you dug grave to go down. Okay, I think I've given you a clue now. So if you know gravestone is down, then you know that dragonfly is up, because dragonfly is the opposite of gravestone. So the analysis here is that price opens here and rallies down. The bulls, the bears push the price down, then the bulls are here and they push the price far up. But within that time frame, the bears push it back down, and then the price closes at the exact position, the exact price where it opens. The market closes at the exact price where it opens. Then the same thing happens here. Okay, the bears put the price down, and or probably the bulls put the price up, then the bears put the price down, and the bulls came in again, put the price up, and the price opened. The market closed at the opening price. The dragonfly doji, this is the bullish. This one actually tells us that the market is going to buy. Okay, so the bears put the price down, and the bulls came in. There's something trigger here. Something trigger here. It triggered the bullish pending order here, and then it goes up. It goes up, and then it closes exactly where it opened. The same thing happens here. But the people that did the last job here are the bulls. So it's most likely the price is going to go bullish. Most likely. Not 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 that not automatically, but most likely the price will go up. Then here now, market opens at this price. Then the bulls rally the price up. And the bears came in, they came in. and close the price down. And since they're the one that did the last job here, the price may actually continue down. Then we have the floor price. I know somebody gave me this example in class from the assignment, and I was very excited. You have the opening price, the closing price, the upper price, the lower price. Is the same price. So it's floor price. We call it floor price. Very interesting. Okay, where the bulls and the bears agree on the same price. You will see the opening price is a time of indecision in the market. It literally means nobody was winning. Nobody, because the price didn't go up, it didn't go down. It closed where it opens. It closed where it opens. That is what doji means. Okay. Then when you are in an uptrend or downtrend, watch out for these three variation. Watch out for this variation pullback. Oh, I don't even know what I was writing there. I don't know what I was writing there. Okay, but this is what I was writing actually. This is the interpretation of what I was writing in the previous chat. This is the bearish reversal dragonfly doji. The dragonfly doji is a bear reversal candlestick doji formation. Price rally high and then came down to close at the open price. So gravestone doji is the opposite of dragonfly doji. Note, you should be looking for gravestone doji, the downtrend to go short. Downtrend to go short. So what does that mean? What does that mean? It means the market is going down like this. It's going down, then it goes up. It's going down, then it goes up. Then it's going down, then it goes up. Then it's going, then it wants to go down. Okay, so now I remember. Don't worry, very soon I'm going to be teaching you the chart patterns. Chart pattern. So this market now go from here to here. If I'm expecting a sell here, because the trend is down, this trend is down, this trend is down. If I'm expecting a sell here now, I'm expecting a sell here now. That means I'll be looking for, if I see a gravestone doji here that shows a bearish, the market is supposed to end here at this particular zone here, I'll be looking forward to a sell. I'll be looking forward to a sell. That's what it means. That's what it means. And then dragonfly doji is a bearish reversal candlestick doji formation, price rally high, and then came down to close at the open price. Okay, so let's get to charts. Let's quickly get to the chart. Let's get to the chart. Let me share the view. Is someone still with me? If you are with me, type 3 in the comment section. If you are still with me, I will need to close this class. This is already getting long. Okay, so if you are with me in class, just type 3 for me in the comment section. Type 3 in the comment section. Type 3 in the comment. So this was what we were doing together yesterday. What we were doing together yesterday. And now, today now, we will do something a little bit different. Okay? We do something a little bit different. Okay? Why? Because I think the market move from zone to zone. So what you'll be doing for 4-hour time frame, you can also do it on 1 hour too. You'll be looking for zones. You'll be looking for zones. You'll be looking for now. Okay, let me tell you the difference between support and resistance. This is when you use a line. Okay, one reason we'll go on, we'll elaborate it on that. When you use a line like this, a line is called, this is like resistance, which also means support. It can mean support, can mean resistance. Okay, when you use a single line like this, it is called support and resistance. Okay, support and resistance, support and resistance, support and resistance. But when you do something like this, you do something like this, you do something like this, it's called demand and supply zone. Because this time around, you're not just picking a price, you're picking an entire zone. This is what demand and supply. This is supply zone now. Then it becomes a demand zone here. So it can cover many candles and more wicks. But when you put just a line, it's called support and resistance. When you put a zone like this is called zone. This is called zone. Exactly what I'm looking at. Exactly what I'm saying here. Now look at this long-legged doji at this place now. Look at this long. There is something here. This is the resistance because something get to this place and came down. Somebody somewhere was pushing the market down from here. From here. Somebody is pushing the market down from here. Somebody is pushing the market down from here. From here. And then in the future, I'll be waiting. If this same zone we have something respecting it in the future, and come to think of it, come to see something like this in the future. This zone now, I'm having a doji. Now I'm having a long-legged doji on that same zone. This is where reversal candlestick becomes very interesting. This is where it becomes very interesting. Form on support and resistance. They can form on demand and supply zone. They can form on trend line touch. They can also form on Fibonacci retracement levels. This is what give value. It is the zones that give values to reversal candlesticks. Not just because they can be. This is the doji. I may not likely be taking decision based on this doji, but this doji, this is common doji. This is almost like common, but I thought the common doji they are almost very similar. But you see, this is long-legged doji, this is the common doji, just similar. But then this one is forming on its own. This one is more important to me than this one. More important to me than this one. So now it is forming on this same zone. So my interest, oh my goodness, this is what I'm looking for. So the moment I see this, I know that this market that is coming down here now, based on this zone, because something happened here. This is a resistance now. It has become a support here. When you see resistance is the potential support in the future. Support is the potential resistance in the future. So I'm looking at it in the future here. It has given me a doji. A doji. So a doji, this is 4-hour time frame. So what do? I'm going to be turning to a lower time frame now. Imagine I see this doji on 4 hours. It has completed. So the moment it's completed, because it's a doji, I want to need another confirmation candle. So I'm going to switch to lower time frame of 1 hour. This is December 7, 2022, December 7, 2022. I want to switch to 1 hour candlesticks. I want to switch to 1 hour. Now, 1 hour now, on 1 hour now, I'm already seeing this. By the time this candle form, there's a bullish candle here now. There's a bullish candle here now. After that one has been formed, this bullish candle here. The moment we entering a buy state, I've waited long enough as a conservative trader. Now, an aggressive trader will have entered trade immediately that formation, happens. And so what happened? He entered the trade. After that candle is formed, put the stop loss at this side, and then market moved to the upside. By how many pips? Market moved this way and move as far as 145 pips, and that's remarkable. 145 pips. So, but what ushered us in a doji on 4 hours? Doji on 4 hours. Doji on 4 hours. Doji on 4 hours. Now, let's look at these two. So now, by this now, I've been able to explain demand and supply zone, how you look for your reversal candlestick on your demand and supply zone. I've already explained that. Now, let's look at the trend line touch. This is my point one. Fortunately, I didn't even prepare this particular spot in mind. They didn't just tally. And just giving us what we want. Honestly, I just open my chart and I just see it. My goodness, I have my point one. Then I have my point two. Now, at the third point, which is supposed to be where I'm going to be entering a buy, I'm seeing a common doji. Did you see a common doji here? This is a common doji. At that third touch. And the common doji is telling me that this pullback is about to end. The momentum that is pushing the back down on this spot. If it's not on this spot, I don't need it. I don't do your area. This is the down zone now. This is the down zone. This is the area of interest. This zone, this place now is the down zone, is the area of interest. This is the point of interest, the area of interest. Now, at the third touch of this trend line now, I'm seeing a common doji. A common doji. So there are two things you do. You go to lower time frame and find another bullish engulfing candle. Two things you do. So let's go. That's December 12, 2022. It's 12, 12, 2022. So let's look at this here. So at this spot now, I will see it has broken resistance at the close of this candle. At the close of this candle, I'm going to be entering a buy. At the close of this candle, I'll be entering a buy. And then the market went up. Did you see? Did you see? The market went up to this side. How many pips is that? 180 pips. Oh boy, oh boy. 180 pips. 180 pips. This is how to trade, brother. This is not gambling. This is professional speculations. It's not gambling. Okay? I didn't even prepare this spot in mind. I didn't even come to the chat. This is where we all left it yesterday. I didn't plan to come to it. And you can see the thing is just telling. So if I explained zone now, how to use zone to enter trade. Now I've explained trend line touch now. See how the trend line is giving us something. So I told you the first point is to use, to go to lower time frame and see another confirmative bullish engulfing, bullish candle on this particular instance now. Or normally, if I don't want to wait, if I just want to get away from my system, so what I do is I put a pending order above the wick of this guy, of this doji now. I put a pending order, a buy stop. My price will be here. So my price will now be this particular price here. This will be my price, 1.22489. Then I put my stop loss below it. Okay, put my stop loss below it, and then I can walk away. Okay. And you don't forget that your TP should be maybe within the last swing. So you're going to be having something close to like 83 pips. I'm telling you, 83 pips. Say you want to trade your stop loss. That's how to trade. That's how to trade. So let's look for another example. And then, so we've explained trend line thought, we explained demand and supply. I'm not going to be explaining Fibonacci today. Even in the previous training I did, I've not taught them Fibonacci. So I'm waiting for the day I will teach all of you together, teach Fibonacci together. Okay, so we're looking at I like this. I like what I'm seeing here. Did you see now? This is a resistance, is a resistant, is a resistant, is a resistant, is a resistant, is a resistant. Now is a resistant. Every resistance is a potential resistance or support in the future. Now look at this now. Is a resistance is there. Is somebody following me there? Is a resistance here. Is a resistance there. And then when the resistance is for, I'm waiting in the future. But I'm waiting in the future. There's a resistance here. Now, in the future, a doji has been formed. Long-legged doji at this resistance. Now, I call it resistance now because a single line actually covers it. Imagine this is a pinpoint. This is a resistance. It's not a zone now. It's the exact price. The exact price. Price touched it, came down, came to touch it again. When it's touching it, I've already drawn my line. When it's touching it, something like this happened on gold this morning. This gold we traded this morning. We came out with about 112 pips profit. And see, this thing happened like this. Come on here. The exact point now, this is what they call support and resistance. Is right from the zone I drew the other time. Okay, you can draw zone too here, but the exact point is being respected. Okay, so I'm seeing doji. Oh boy, I'm seeing doji on 4-hour time frame. So when you see doji on 4-hour time frame, please respect it. Call it brother. Say brother doji. Brother long-legged doji, bro. Just call it bro because they're about to give you money, bro. Bro is about to give you money. I'm telling you. Just respect the long-legged Doji brother. In fact, you can call him Uncle Doji. Oh my goodness, oh boy. So now, the moment is finished for me. Okay, I go to my 1 hour time frame, and I want to see, do you have a confirmative, bullish engulfing candle? For example, if I'm to be here now, this is what I'm going to be trading. I'm going to be trading. I'm seeing this now. Is going up, is going up. So I'll draw my line. I'll draw a line like this. Any candle that here, because this is what we are looking at. This is what we are looking. This is where doji is from. Any candle that close below this line, I'll be entering. This will be my entry point now. This will be my entry point. My entry point. That candle that broke this, that closed below here, because it will mean, this is what it means. It means I'm combining these three candles together. They give me a red candle and they've overshadowed all this one. It's like a bearish engulfing. Like these are the look on higher time frame. This bear that engulf all this candle at the close of this candle now, because there have been a pullback then to return. My goodness, at the close of this candle, I will enter a sell trade. I will enter a sell big time. And I can guarantee you, I traded this particular thing in 2022 because this is how I trade. I told you in the days of Trump, we have consolidating market at every resistance you sell, every support you buy. I'm telling you. I have traded this particular trade far back as a 20, because this is a 2022 chart, December 2022. December 2022. 2022. I was in Lagos. December 2022, I was in Lagos. Yeah. Yeah. I remember. And December 2022. Yeah. Okay, so let's leave that for now. And so are we entering a trade there? Are we entering a trade there? Are we entering a trade at that okay, so are we entering a trade when that happens? So I'm entering my sell here. My stop loss will be here. My stop loss will be here, above, somewhere around here. And then I see what happens. How many pip profit is that? Boom. 128 pips. 128 pips. So that means I've explained resistance, support and resistance. I've explained demand and supply. I've also explained the trend line touch. Trend line touch. Those are the areas, these are the down zones. They are my zones. Those are my zone. Those are the zone I'm looking for. Okay, they are called the area of interest. My area of interest. So that is where I've been needing to look for the reversal candlesticks. I don't just pick reversal candlestick anywhere, anywhere. And look at it. Price move from zone to zone. Look at it. It went to this place. It broke this resistance. Came back to retest it here. Came back to retest it. Came back to retest it here. And then it moves up again. And then if you see like here now, did you see here now? Did you see here and here? This is support here. In the future, it's giving me bullish engulfing here. If I'm on my computer when this candle formed, I will buy no matter what happens. I told you in those days in class, history repeats itself. That is exactly what it means here. There are two statements I told you. I said number one, trend is my friend. Number two, history repeats itself. So when you hear on my slide that time, I remember I told you on the slide that look, when we're talking about trend and that history has a way of repeating itself, that is exactly what we mean. Here, support happened in the future, history is repeating itself. If you're to be in physical class, and I think I said it in this class too. I said in 1993, one Yoruba man won presidential election. Now in 2023, 30 years later, or how many years that later? 1993, 2023, another Yoruba man won election. So what happened? History repeated itself. The same is happening here now. History repeating itself. That's everything that we are doing here. The same that we are doing here. When I told you here now, when I told you this, a support here, what is that? What exactly we are saying is that history, whatever happens here is happening here again. History repeats itself. Those are the statements that you must never forget. Number one, trend is my friend. Number two, history repeat itself. Very important. Very important. Look at it now. Look at it now. History is repeating itself. History is repeating itself from here now. here, support here, went up, and then came back again, and then gave me bullish engulfing. I'm going to take in my buy. And I look at it on the same zone now, on the same zone where history has been repeating itself now. I'm seeing a doji. Oh boy, oh boy, oh boy, oh boy. My goodness. Look at it here. Look at it here. Price came to this place, formed a support, went up, came back again, retested, formed a support. Now in the future, I'm seeing a doji. Now in the future, I'm seeing a doji. Did you see a doji here now? It's telling me that look, history is about to repeat itself. Okay, it repeats itself here, 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 and it's about to repeat itself for the third time. For the third time. For the third time. That means 2000 and 2003 plus 2053. And I Yoruba man will win presidential election again in Nigeria. Oh boy. Oh boy. I beg spare me. I'm not a politician. No. I'm just kidding. No. Okay, but history is repeating itself here. So I'm seeing a doji here. So I shift to now. This is 1 hour now. I can now shift to 15 minutes and see if I will see a bullish candle be forming on 15 minutes. Ah, yeah. A bullish candle be forming on 15 minutes. Is here. Did you see? Did you see? This bullish candle has formed now. Has formed now. Okay, I'm going to be taking a buy here at the close of this bullish candle, and then boom, the price went up. By how many pips? By how many pips? The price went up by 57 pips, 58 pips rather, 58 pips. And that's remarkable. So that's how to trade. Price move from zone to zone, zone to zone, zone. Then look at it again. This one that's now support now in the future has become resistance here because price broke it and came back in the future to test it. Now I'm seeing another candle here. This is a shooting star. This is Angry Man. This candle here is called Angry Man. This candle here is called Shooting Star. They are all bearish reversal candlesticks. So when I see the shooting star, I'm going to enter in a sell. And of course, price didn't go so much down, but then I've like broken even or take some profit. I'm telling you. Then in the future again, look at this. History is repeating itself. My goodness. History is repeating itself. This is how to trade, bro. History is repeating itself. Did you see now? What has happened here now is happening here again. So I've been looking for my reversal candlestick here. I'm looking for my reversal candlesticks here. Now I can't really see many of my reversal candlesticks here. I cannot, but I see a rejection here. I see this candle. This is not even zone. Now this is support. This is support. At the exact price is a rejection. When I see the rejection now, because you're going to see bullish engulfing in on 15-minute time frame. Okay, December, January 27 on 15-minute time frame, you're going to see a bullish engulfing there. You see a bullish engulfing candle there. This candle now, you are taking a buy and win just a little. And win just a little. That's how to look for the reversal candlestick. They are not relevant except they are formed at the down zones. Look at this one now. Look at this resistance. Price came here, came down. In the future, it is repeating itself. Now I'm seeing a bearish engulfing. Do you know that if I'm here when this thing is formed, do you know that I will enter this trade? As in kí n má enter kẹ̀ àbí mi ò ti enter ni? At this bearish engulfing candle, this when I see bearish engulfing candle, I don't think again. I don't think again. I just enter my trade. See now, the bearish engulfing candle at this particular resistance now. See, this is what I'm showing you tonight. Different from what we showed yesterday. Yesterday was just to identify the dojis or those particular reversal candle. But then at these zones now, I'm looking for reversal candle. Don't worry, I've not taught you other ones. I've only taught you doji. But this one is the bearish reversal candle. It's called bearish engulfing. We still teach it in the future. But the point I'm trying to make this morning is that look for the zones first. 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 And then you see what the reaction of prices at those different zones. The zones are the most important. The zones, the demand and supply zone, the support and resistance levels, the trend line touch, they are your area of interest. Whatever you're going to be doing is based on what is happening at those zones, at those areas, at the down zones. So you don't just trade. Your every trade should be tied to. Every trade should be tied to those zones. Every trade should be tied to. Look at what I'm saying here. Look at what I'm saying here. Can you see something here? You do see money here. This is still what they call money. Real money. Real money. My point one. So I've had my point 1. I'm going to be editing the class here. I've had my point 1. Are you with me? If you are with me, just type 4 in the comment section. Let me check. All people are still with me. Oh my goodness. Only 3 persons. All right, okay, they're coming in. If you're with me, type 4 in the comment section. Just type 4 in the comment section if you're still with me. If you're still with me, type 4 in the comment section. If you're with me, type 4 in the comment section. Oh my goodness. If you're still with me, please type 4 in the comment section. Who is there? I hope the network is okay over there. I hope the network is okay. So if you are there with me, just type 4 in the comment section. Just type 4. Type 4. Type 4 in the comment section. Is somebody there? If you are there, type 4 in the comment section. Just type 4. Type 4 in the comment section if you're still with me. All right. So let's just get back to this. So you see my point 1. My point 1. Then you see my point 2. Then at my third touch, I'm seeing a gravestone doji. This is a gravestone doji. And I told you it's a bear reversal candlestick. Gravestone doji. You see a gravestone doji here. It's a gravestone doji here. Okay. See a gravestone doji here. And then the price sold. The price sold. The price sold by how many pips? Price sold by how many pips? That's about 66, 67. That is 72 pips, so to speak. At least you'll have cut some pips from this place as a day trader. So that's about that's how I like us to we've stayed too long in this class. Okay, I like to end the class at this spot at the moment. And then I see you again tomorrow. Thank you. If you have any class, drop it for me on WhatsApp and then I will quickly respond to it. Or if you want to type a question now, you can quickly type on the chat box. But I think we should end the class here. Just type the question on the WhatsApp group and then I will respond to you. Thank you. God bless. Good night.